Good morning. This is Brian Split with Allendale here on Friday, November 19th, 2010 with your morning coffee. We did have volatile trade overnight with early rally sold into. The December corn contract finished down 6.5 cents at 5.35 1/4. The early rally did reach near 5.50 in the December contract, but ended up back below the 50-day moving average and settled at 5.35 1/4 with the 50-day at 5.38 1/4. So we're going to watch that area on the opening to see how the early direction looks. As far as January soybeans, down 17.5 cents at 12.24 1/2. We did again see an early rally above 12.50, but pressure came in at the 20-day moving average there at a high of 12.56 with the 20-day at 12.57. And again, we have some very volatile trade in the soybean contracts overnight. All of the recent ranges in the past week have been 50 cents or more per day, with the overnight range being about 30 cents. So we could reasonably look for the range for the rest of the session to be extended in one direction or the other. The wheat contract nearby December Chicago down 5 1/4 cents at 6.40. We are still watching the dry western wheat situation, and also there was news that the Russians may not want to export grain until the end of 2011, so that is going to be a situation that will continue to provide a friendly fundamental undertone to the market. Otherwise, really, we had selling start at about 4 o'clock overnight. Why that is? Because China did raise their reserve requirements. They also increased the reserve rate by 50 basis points, and that is really continuing to add to the Chinese fears from earlier in the week, and again, seeing some liquidation in other markets overnight. What did the dollar do when that happened? Really, the dollar's been moving steadily higher since about 4:30 in the morning, and we are seeing some consolidation now ahead of the morning opening trade. As far as the meat markets, we did have pork cutout up 24. We would expect the spreading in the market to remain a prominent feature as we do see volatile grain trade continuing here. On the cattle market, we did have cattle on feed estimates looking for more neutral results from that report. And as far as cutout, we did have choice down 65, select was down 28. But the April cattle chart does look pretty friendly with recent trade breaking out above some resistance. So we're going to want to see how that market looks to handle that and if it can sustain that strength. As far as outside markets, it does look like the stock market is trimming some early gains, again following general macroeconomic trade this morning. The Dow futures are down about 35 points. S&P futures down 4 points. We do have the dollar down 11 points right now, but it is 35 off of its lows. And as far as early trade, we did have some support taken out at the 50-day moving average, but we are rejecting that and back above that off of the Chinese news. So again, we're going to see these markets moving very quickly here. Nothing seems to be moving slow anymore this week, and everybody's all in one direction or the other. So as soon as we get any kind of news, it just shoots in that direction. But long term, we do need to watch this dollar index. It has built a short-term uptrend here, and it does look like it could be trying to form a bottom, but yesterday's trade did violate that uptrend. So we need to see this dollar index catch hold here. We've got news that Ireland is looking to possibly get a loan from the IMF, and that is supporting some of those European fears. But overall, we've still got a lot of issues out there, and there are still a lot of fun linked out in some of these markets that we need to pay attention to. Other than that, one other market of note, we do have the cotton market down the 6-cent limit today, and that market obviously has been making limit moves up and down for the past couple of weeks here, and we continue to look for that type of trade as we are seeing very strong cash buying in China, even though they are trying to tame their general inflation right now. So there's a lot of news out there that we need to pay attention to. We're going to look for an early open here to look for lower trade, but we have held uptrend support here in corn. We're holding 38% retracement in the January soybeans, and this wheat market does still have some friendly things to look for here fundamentally in the short term that will support all of these markets on these liquidation events. So if you are looking for trade recommendations or any type of a hedge strategy, please give our office a call at 1-800-2-MARKET. That's 1-800-262 7538. Also, we are having our conference January 21st and 22nd, so we'd like to get your spot reserved for that. Give us a call at our corporate office here or one of the branch offices in your area. And great luck trading to you today. Thank you.